Well, I don't often get surprised in this business, but a forecast I heard on the ABC's 7:30 last week raised an eyebrow. There was a report about the Aussie dollar, and here's the tip from a bloke who manages $2.5 billion for an international hedge fund, so you'd think he knows what he's talking about.
By 2014, at the very latest, I'm convinced that 1.7 is more than credible. Even that is probably conservative. You have been at 1.5 if you go back to the mid-1970s. In terms of where it could go to, ultimately, it could quite easily breach $2 to US dollars.
What was that? What did I hear? Can you play that again?
It could quite easily breach $2 to US dollars.
$2 American for every Aussie dollar. Bring on the internet shopping. And how cheap will those big tractors be? Hang on. For farmers, it doesn't quite work like that.
What we do know is that for every 1% increase in the Australian dollar, that shaves just over $200 million off net farm income.
And that's the issue for any farmer in the export game, and that's about 60% of Australia's primary producers. Let's start today's action in Chicago, where the green ink return. There was some profit taking late in the week, but concern about planting conditions has given buyers some impetus. China is back in the soybean market and corn exports are booming. Wheat trading was strong but choppy as traders start to get a handle on some big crops emerging in Asia and the Stan countries. And local markets rallied as traders worked out that Aussie wheat is cheap in world terms, even with the soaring dollar. Milli wheat in New South Wales for delivery in January next year has lifted $12 on the week, while WA wheat for the same month rose $8. And the spot markets went along for the ride with the futures. There's genuine worry in the west about rain. There is a tip for reasonable rain next week. Not too late, but getting close. Pro Farmer is tipping a cracker canola crop this season, close to a record, and a lift in feedlot numbers has no doubt given that sorghum price a lift. Back to New York now for the soft commodities. And cotton looks on the edge and could head either way. China is cancelling cotton orders, but adverse weather conditions are weighing on future cotton crops. And if crops fail, expect another price spike. Sugar weakened, but is up for the week, and that cotton price looks okay, but the next few weeks will tell the story. Now to livestock, where overall numbers were up, but there was a striking contrast. Higher supplies in the north, while sellers in the south reacted to the cheaper price trend by keeping stock at home. There were big numbers at Dalby and Roma. Both yards exceeded 5,000 head, and this offloading looks set to continue next week. Prices continue to slip from the near record levels around Easter, and while young cattle are popular, export categories are in struggle street. This left the Eastern Young Cattle Indicator. It now sits at $3.89, up 2 cents for the week. Lamb and sheep numbers slumped up to 30% in some markets as producers have reacted to the recent price slump, and with the good season, there's no problem holding stock. So the lamb indicator jumped 39 cents, and mutton showed strength to lift 13 cents. Which brings us neatly to wool, where it was a pretty good week as buyers checked forward and realised wool supply is tightening virtually by the day. Competition was keen across the microns, especially 19 to 22. The Eastern Market Indicator